Welcome to another episode of the Boopos Bus. This is our second episode, and today we have Nate Ginsburg from Centurica. Welcome, Nate. Do you want to introduce yourself for our audience?
Yeah, sure. Thanks for having me. So yeah, like you mentioned, I am the owner of Centurica, the leading due diligence provider for online acquisitions. I also own a few other companies in the online space, mostly serving other e-commerce businesses. And so that was my sort of background. I got my first business that kind of like took off was selling on Amazon FBA. I sold that business in 2017, and then I kept my team, started offering services. That became one of my companies, Sellerplex started doing due diligence with the big aggregator acquisition boom in 2018 or 2019. And then I acquired Centurica to build on that. We closed almost 2 years ago, so in the spring of 22, and still running Centurica, running Sellerplex, and we also now have a freight forwarding business. So that's me.
Very interesting story, and actually very inspiring, because I think you've been a buyer, you've been a seller, you created business, you run businesses. So other than helping people in due diligence and helping people manage their brands, I think you can provide a lot of stories that people can get inspired with.
Yeah, thank you. I'd say at my core, I'm really a business operator, but my take on running any business is I'm a team guy. And so, what has supported any success I've achieved or enables me to, run my companies the way that I do is just entirely on the back of amazing people that I am really grateful to have the opportunity to work with. And so yeah, I'm a big team guy, have an amazing team, and having a great team, solves a lot of problems and opens up a lot of opportunities. And so, yeah, that's kind of my, at a high level, how I approach my businesses.
I agree. That makes a lot of sense. So today I wanted to start talking about due diligence, among other things. We as a lender, we request our buyers that perform due diligence on their acquisitions. And that's something that helps us underwrite the whole deal. But in the end, it's also for their benefit. And sometimes people don't understand why they need to run due diligence. Why do you think it makes sense to run due diligence? And why, or what part of it you think people should run internally versus using a third party like Centurica?
Yeah, good questions. This is something, so with Centurica, we work with a lot of first-time buyers. And yeah, a lot of the process of working with them is actually educating them, because when most first-time buyers, hear, oh, due diligence, or, let's say they're looking at a deal with Boopos and you say, hey, we recommend due diligence. A lot of them still don't really understand how it fits in and, why it's so important. And so, at its core, there's different kind of buckets of due diligence. I'd say, financial, verifying the numbers, making sure that the revenues and expenses and profit is what the seller is, representing, as well as then there's kind of, commercial diligence, kind of more diving into the business. But for, simplicity's sake, I think, if there's one thing that you want or need to verify as a buyer, it's that the numbers are what the seller is representing. And this isn't to say that, I'm sure, I'm pretty sure that, businesses that are listed on Boopos or with different brokers, like, there is some level of vetting of the numbers that happens when a business is listed for sale. But, as a buyer, this is the most important thing that you want to, verify, double check, triple check with people on your team, on your payroll, that are looking out for your best interests, to go in and make sure, again, that the revenues are what the seller says they are. A big one is going to be the expenses. And so this is an area specifically with ad backs that is contentious. Sellers are going to push for more ad backs. And that's a big area where if you hire a professional firm like Centurica to come in and review the ad backs, it's, quite common that we will identify things that the seller is adding back that, in the reality, they, probably shouldn't, or the buyer should push back on. And so, that's one area that it's common that like our fees will be more than cover, we'll identify ad backs that we recommend the seller push back on, or the buyer push back on. And, often that will cover the fees that they're paying us. And so it's, one, it's verifying the numbers are, what they say they are, what they're supposed to be. And then, going through some of these areas that are, not so black and white, such as the ad backs, and having someone on your side, on your team, to be an advocate for you and pointing out these things and, what's market, what's not. And again, with first-time buyers, a lot of people, they don't know. And like, all buyers are very optimistic, as they should be. I mean, if they're making a big investment, they should be excited about it. But that's not to like, they should still be appropriately cautious. And having someone in your corner to advocate and verify for you, I think is, that alone is, something that all buyers should have in their corner.
I agree. Yeah, we try to educate them as well because they think that due diligence is just a lender requirement, but it goes in the benefit. I think they can close a much better deal if they perform due diligence, and then they can identify our areas that need attention when managing the business once they take over. So it's a very important thing. Actually, you mentioned especially working with first-time buyers. We do get first-time buyers as well as repeat buyers. Actually, I think we got a repeat rate of around 30%, so 1.3 times of 1.3 acquisitions per buyer. And I guess that you have the same type of mix between first-time buyers and repeat customers. What's the difference? What do you see in terms of repeat buyers versus first-time buyers when just going to Centurica asking for a report?
So with Centurica, we have a pretty broad spectrum of buyers. We have first-time buyers looking at a relatively small e-commerce SaaS website for $600K, $800K, $1 million. We have more kind of like seasoned online business operators that have maybe had their own exits. Maybe they've done some acquisitions that are, more experience in the space. And then we also work with, bigger funds and private equity that are, professional buyers that are doing, 10, 20, 30, 40, $50 million acquisitions. And, I'd say one of the biggest things between the more experienced and less experienced buyers is really like with the bigger deals and the more experienced buyers, like due diligence, it's not a question of if, it's a question of, who and, how much of the scope. And so as you're aware, like bigger acquisitions, they all have a quality of earnings. And, and this is just, it's like just like a known part of the acquisition process. If you're looking at a 10, 20, plus $1 million deal, like you're not going to skimp on due diligence. But these smaller acquisitions where it's interesting actually, because a lot of the newer buyers, it could be a smaller, price tag, but this is actually like it's a more significant portion of their own money versus a bigger fund that could be doing a multi-8-figure deal, but it's like, it's not actually their money. They're not on the hook. There's no personal guarantee. And so I think like the more sophisticated the buyer, the more, the more cautious I think they are, and the more that they want to invest in their, own kind of playing defense on the deal through good due diligence. And so, that's kind of something the, more experienced buyers, they just kind of already understand. Also, a lot of them, just like they get what a quality of earnings is and financial due diligence, where a lot of newer buyers, they're not even really sure what due diligence is. They're like, oh, it's a check on the business, but they don't really know what that entails. Whereas the more experienced buyers have, very clear of what this is, why it's important. And they just want to move it forward.
Makes sense. One of the things actually, now that you mention customers with whom you have a long-standing relationship, one of the things that we learned that you guys do is this pre-due diligence report. So they're like, correct me if I'm wrong, but it's like a small reports on businesses that you do at the very early stages of scouting, perhaps for bigger buyers. And I found it that very interesting, because in the end we get a lot of people coming to us seeking not only financing but businesses for buying, and they also want to learn what makes a good business, right? Instead of just scouting them themselves, it's really handy to have a third party to have this initial steps of understanding whether a business is a fit or not. How does that work exactly?
Yeah. So this is something that we offer to clients or people that are interested in acquiring a business. We call it our like a quick deal review. And so it's cheap. It's a couple $100. It gets turned around in, a matter of a couple of days. You kind of schedule it with us, and then our team, you schedule it with us, send us the SIM, send us the whatever information, and then we'll have our analysts run through it, run through the financials, run through the marketing materials, and then it's like a high level financial analysis of what is, presented by the seller and the broker, as well as diving into what we see as some of the, risks and opportunities of this business. And this is something, again, especially for newer buyers that our team, I think we did, I don't know, somewhere around 100 deals in the last year. And so we look at a lot of different businesses, and we look at a wide range from e-commerce to SaaS to content. We're doing brick and mortar stuff now, local flower shop, pain management clinic, massage salon. And so we just, have and are just looking at a lot of businesses, and, from that are able to kind of pull out what we see as, risks as well as opportunities, any kind of red flags, or just kind of questions that we would want to highlight to dive into in the event that the prospective buyer places an LOI or has an LOI accepted and wants to move forward with diligence. And so that's just like a package we put together to try to help add value and start a relationship. And then if they move forward with the deal, of course, happy to support with deeper due diligence as they move forward.
Yeah, makes sense. Again, it's, with all those marketplaces out there, it's really hard to tell which businesses are good and which aren't, which follow a specific criteria that you want to use for investing. So this is really helpful, I think. By the way, I wanted to chat a little about how you're seeing the market. And before we get to your Market Watch tool, which I find very interesting, do you get a sense of the terms of the deal when you're performing due diligence? That's probably out of your scope, right? You mostly focus on the business itself, but you don't get too much into the deal. Or do you get a sense of how deal terms are evolving these days because of your involvement in due diligence?
Yeah, a little sense. That's not, we're a little aware, and, sometimes we'll kind of make recommendations. I'd say just from being in the space can sort of, comment on, trends in deal terms a little bit, just because I'm, between Centurica as well as just, conversations with other people in the space have a little bit of insight there. And I think what we've, what's kind of been seeing, just sort of high level sort of stuff is, I think e-commerce, which was on a big boom, was a big run up for some years, probably peaked, late 2021, early 2022. That's, been on a big decline since then. And the thing is, it's, a decline from the peak levels where people were honestly like irresponsibly deploying capital. And, you can look at a lot of these, aggregators, for example, that like didn't work out so well because of their, paying too much, not vetting the businesses enough. And so, that's obviously stopped. And, that has also created a lot more just kind of caution, in the space, and, not in a bad way. So, e-commerce people are like, good businesses are still selling for, good multiples, but like, bad businesses that used to get, very generous valuations, like those are, not moving. And so we're seeing those, slow down in that. SaaS is strong and, maybe like, picking up. I think there's more of an interest in, just SaaS as a category. And, similar with Shifts, I know that you've made a Boopos where it's just other investors as well, just kind of see that the stability, the recurring revenue, it's, more of a barrier to entry. And so I think that is becoming more attractive to investors and, willing to like pay more for better businesses. We're still seeing some websites that, like even with some of the, there's a lot of uncertainty in kind of, content type businesses with Google updates, as well as different AI stuff kind of, changing the landscape. But yeah, we still are seeing some, content sites and some sizable ones, being sold. In terms of deal structure, I think in general, buyers are becoming more cautious, or have become more cautious now versus, a couple years ago. And so, yeah, just deal terms being, multiples, haven't seen them lower so much, but not seeing excessive multiples as much, or at least from our standpoint. And so, good businesses are still getting, like, the multiples haven't dropped significantly, but seeing less like, higher multiples or, kind of overpaying, in my opinion, for some of these, different businesses. Yeah, I don't know, couple insights or thoughts from what I see.
Yeah, I think that's what's going on. What happened in the e-commerce space is interesting. I think a lot of people from outside the space just came into the world of e-commerce thinking that it's easy, or it was easy, and it's not easy at all. I mean, you have to manage the operations, you have to be very hands-on. There's inventory involved, working capital, and it's pretty hard. And actually, I think many of the platforms and aggregators that were buying before are just trying to put their business together rather than acquiring more platforms. But interestingly enough, you have a couple of working capital lenders out there that recapitalized and are lending on working capital for e-commerce again. Not us. We want to focus on SaaS because in the end we feel that the credit opportunities is much better. But I don't know. Perhaps over time we will look into the space again. Now that we've learned a few lessons.
Yeah, well, just to kind of comment on that really quick, I think the e-commerce space, I think it's an interesting time for e-commerce. I think there's been a big, kind of weeding out of a lot of these lower quality businesses that are, previously would have like gotten a 3x, 4x, 5x offer, in a day that, now people are realizing like aren't worth that much, don't have as much kind of moat or staying power as some of these, inexperienced, well-capitalized buyers, thought a couple years ago. But I think like e-commerce as a category, I think that it's like, it's cooled off, but then is still like very strong for the future. And, e-commerce as a category, I think it was overhyped for, a while, and there's this big run up, but like there's still amazing businesses. E-commerce as a category is still growing. There's new, with all this TikTok shop and these different kind of shop stuffs that are opening up, there's like new ways that brands are able to make sales and connect to customers. And so I think e-commerce, I'm still like, long-term bullish on e-commerce businesses. They need to be, good. And yeah, I think it's like healthy that there's been this sort of like pullback, that, to kind of recalibrate to to
Agree.
situation.
Yeah, I think that the space has cooled down in a good way rather than in a bad way. So that's good. Without all the noise, it's usually much better or easier to work and create value. All right. I think that Nate, given your background in e-commerce and perhaps Centurica is mostly focused in the space, or do you also get to work with SaaS businesses, content, and a few other verticals?
Yeah. So we work with really like any type of businesses. So historically, we've done during the whole e-commerce boom, we were focused a lot on e-commerce businesses, but like the team is made up of just like, smart analysts, business analysts. And so we do have niche experts, whether it's with e-commerce and selling on Amazon, whether it's, digital marketing with SEO, whether it's, with like SaaS, and we have, tech analysts that we work with to be able to provide like niche value on whatever type of asset. And so, that's something that, in the last few years that I've really worked on with our team is being able, expanding the surface area of where we can add value. And so, we're like very good with e-commerce, SaaS, content, and, have been getting more into brick and mortar type businesses as well. And so, just more kind of traditional quality of earnings, and even getting into some like, HR compliance type diligence for businesses that have a bunch of, local employees. And anyway, we don't need to get into the details of some of the things that are kind of buyers need to be aware of for those types. But we've got a great, like, the thing is that, like, with due diligence, especially financial due diligence, the core deliverable is going to be the same exercise, whether it's a SaaS, e-commerce, content, brick and mortar. And so, we have just like really good financial analysts that can, operate on a wide range of companies, as well as these more niche analysts that we bring on for different business models.
Agree. Yeah. The brick and mortar space is very interesting. Actually, 2 to 3% of the total small businesses in the US are online businesses. So that means that 98% is brick and mortar businesses of different kinds. So at some point in time we want to explore that space as well, but it's much harder. In the end, you don't have all these data connectors or these platforms that online businesses use.
Right.
We'll
see with some, agree. There's a big opportunity with brick and mortar, and also there's, it requires a different level of diligence a lot of times, with, they're a SaaS or e-commerce, you can just plug into their, their selling platforms and you can verify revenues. And that's like pretty straightforward. Whereas with a lot of these brick and mortar, we have people will like show up with like, it's like, they have like QuickBooks desktop is like how they're like not even able to grant access, or like they've got, literally like a, shoebox of, of receipts and things. And there's like, it's shocking actually, like how unsophisticated financially a lot of just businesses in general, but especially, brick and mortar. And these can be multi-million-dollar businesses that are, I don't know, like run on cash accounting, for an example, and just like don't have good financials. And it's a lot harder to verify when, we're not able to just like plug into their, payments platform, but we still can. And I think, agreed. It's 5%.
One thing that shocked me, I'm European, and one thing that shocked me when I started doing business in the US is the number of businesses and customers that pay those businesses with checks that are sent on their mail, and that was crazy to me. I mean, I thought everybody was paying with credit cards and wires, but apparently no, checks are still a thing. But anyway. I wanted to touch before we wrap up on two very valuable products that Centurica runs. So it's the Market Watch, that's one thing. And then the other is this quarterly market report, which I very much look forward to receiving every quarter, because it gives me a lot of insight on what's going on in the market. And it's pretty good, because actually you should charge for that. You're giving that away for free, and it's pretty cool. How do you compile? I mean, what are your sources there? I think you're covering mostly online brokerages, right?
Yeah. So well, thank you. We do put a good amount of kind of time, effort, and investment in the Market Watch, as well as reproducing the data. And we're not charging for it. Maybe we should or could, but for now at least, it's all free. And so Centurica, we have it's called the Market Watch tool, and it's basically a deal aggregator for online businesses. We plug into, I don't know if it's a dozen or 20 or so different brokers or marketplaces that are marketing online businesses. And so from there, we have our free tool that allows you to go in and just kind of sort by what you're looking for, what type of business, what size, etc., and just kind of aggregates deals. And then from there, we also do some data analysis. We were doing it quarterly, now maybe every half year, where we'll just sort of update trends. So things like the type of businesses that are listed per quarter, or the size or valuations of different businesses at different sizes. How many SBA versus non-SBA. We do a little bit of like sold analysis. It's a little bit tricky because we don't see like the data on what a business is sold for, but we do see that it is sold. So we can see like how long something is, sitting on the market per different sizes, per different business models. And we kind of have a data analyst on our team that is able to take that information, turn it into, pretty graphs and charts and use that to share to, we think it's interesting content, and people seem to like it.
It is, yeah. Actually, you mentioned the difference between ask price and closing price. And this is more or less a feeling based on the buyers we're working with. But 1-2 years ago, most of the businesses were sold at ask price, around ask price, and perhaps with a small seller note. Mm-hmm. And I think these days, most of them are selling for at least 10% below the ask price. So that perhaps is a future improvement. It's kind of hard to track closing prices, obviously, because generally confidential information or something that is not published. But perhaps at some point in time we can collaborate with our data and your data, mm-hmm. and reach that for the benefit of the customers. All right. Well, Nate, I don't have any more questions. Is there anything else that you want to say as closing remarks or closing thoughts?
I think we covered some good stuff. Thank you very much for having me. Hope some of this is useful. And happy to support any first-time buyers, repeat buyers. We have a team of very experienced analysts with all kinds of different business models. We're happy to support as, like we talked about, a quick deal review, just get a quick second set of eyes to look at, risks, opportunities, some high-level analysis, as well as, deeper dive into DD, verifying revenues, verifying expenses, verifying the ad backs, and help buyers be more confident in their big investments and buying decisions.
All right. Well, thanks, Nate. Again, it was great to have you here. Centurica, Nate Ginsburg, thank you, and enjoy.
All right. Thank you.